Hello, welcome back to episode 2 inside of the CLS and DTC course. This is going to be a video just explaining and getting across to you how the financial markets actually work and how they are settled, just so you have a better understanding moving forward when you are trading. Because without this understanding, you are always going to struggle. Again, these videos may seem boring to you, but this is the knowledge that you need to have when you step inside of the markets. Because if you don't have this knowledge, you never really know why markets are moving the way they are or at certain timings. So in this video, we're just going to be discussing what is the CLS and what is the DTC. So DTC basically settles all the stock market and futures and everything else. And then CLS will settle all transactions through the foreign exchange market. So CLS stands for Continuous Link Settlement. We're going to get on to why this was created because it's also very important, because without this in the financial markets, there wouldn't be any huge volatility, meaning not much distribution would happen every single day. So the infrastructure behind the Forex market is the CLS will settle all payments from bank to bank, hedge funds and fund managers and corporates. So global banks, we're talking about the biggest of banks settling trillions per day. So as a large bank, they have to exchange large amounts of currency safely and simultaneously. We know that the banks use our money as retail and customers to make more money. So when they're selling payments across and exchanging currencies, obviously these are big transactions. So they need some kind of settlement system that keeps them safe. And this all happens in certain time windows and certain time cycles. So the CLS is basically a global settlement system that all the countries will use to settle their currency transfers. The DTC, however, is on the other side, and it's stocks, futures, and everything else, bonds, and they settle 3 to 5 trillion per day. So as you can see here, the CLS settles actually 6 trillion of the foreign exchange market moves per day out of the 7 trillion that actually moves inside of the market. So that's how you can see that we are just a small fish in a huge pond. So now we can understand why the market moves in these certain time cycles and take advantage. Again, the trading will come later on. You have to understand this before progressing to the charts, as otherwise you'll have no idea why it moves like this. The key idea is markets run on financial infrastructure, not just charts. Moving on, why was the CLS created? So before the CLS existed, FX trades settled in different countries and time zones. One bank could send money first, the other bank might fail to deliver. This created a settlement risk. A settlement risk is huge when it's such a large amount of money. So basically what happens is one side would pay, but never receives the other currency. This poses huge risk to the banks in terms of capital. What actually caused this whole settlement system to be created was the Herstatt risk event. In 1974, a German bank called Herstatt Bank collapsed. So what actually happened? Banks had already sent Deutschmarks, which was a German currency at the time, and they were waiting for the dollars. The bank failed before completing payments. The result of this was that millions were lost and global FX market panic happened. This became known as the Herstatt risk. So that is why the CLS and the DTC is there to protect the banks when they're taking such large transactions. The solution to this was obviously the systems that they introduced. The CLS and the DTC removed all settlement risk as it introduced a payment versus payment type of settlement. So basically, one bank will say, okay, we want this much in a transaction. And before this is cleared, both sides have to make the payment, meaning both are safe and both sides are ready. Bank A sends USD, Bank B sends Euro. CLS releases both simultaneous. You know what happens when this get releases both simultaneous? That is when we see distribution in the market, meaning that is when we see volume come into the market. If one side fails, nothing is settled. And that is what the CLS does. It protects the banks from making large transactions. So how the CLS works over here, you're starting to get a sneak peek of the trades and the type of idea that we will begin to look at on the chart. But you can try and study this. More videos are coming on it. But as you can see in the final minutes, we are settled into liquidity targets. So how does CLS works? We have a daily process. Banks submit FX trades. CLS calculates obligations, tax fund accounts. CLS settles currencies simultaneously, and then they settle trillions of dollars daily. This makes the FX market stable and secure. So, for example, a few years ago, we had a JPY crash, and that was because the CLS system actually failed. And that is when you see huge crashes or huge spikes in price to the upside. So why this matters for us traders is because we actually need to understand this to understand the charts. Without understanding this deeper knowledge, you will never truly understand what moves these candlesticks, and you will be constantly in a frame of thought that you have self-doubt and you don't really know what's occurring on the chart. So banks must manage the liquidity, they must fund settlement obligations, they must adjust positions during key windows. These activities create predictable liquidity patterns in the market, and institutional flows obviously occur around London and New York session. These are the two key funding windows and where most transactions will be settled. Bridging this to our trading, understanding this infrastructure helps explain why volatility appears at the same times every single day. And that is what we are going to learn inside of this section of Capital Ascension or inside of the CLS settlement course. Markets move when liquidity increases, institutions execute large orders, funding and settlement cycles occur. These happen every single day, and we are going to make the most of it. These patterns form the liquidity cycles traders observe daily, but they do not realize it. So other than that, that is a brief presentation on what the CLS system actually is. And hopefully now you can understand the meaning behind each candlestick in certain cycles. Again, we are going to go into the technical aspects of this and start to draw out what certain timings do, what happens at certain timings. So don't worry, but you have to understand these basics before moving on to the more detailed chart work, which is actually going to improve your trading massively. Other than that, I will catch you all in episode 3. And we will be jumping onto the charts after now we all have an understanding of how these settlements work. I will catch you all there.